Is the stronger dollar the main way this decision will affect the U.S.?
In the short term, yes. Having said that, I do think that the markets are going to adjust to this very quickly, both the currency and the stock market. So, for instance, we would expect Monday to be a down day. There's probably going to be 3 days worth of negative headlines here. But after you get through Monday, I think the market will have adjusted to this in the short term. That includes the dollar. I think in the long run, what Bob was talking about is something of concern, which is to say that there is an anti-establishment wave going on there. And people are going to be looking at other countries, not just Spain, but Netherlands is making a lot of noise about wanting to leave. And if that builds into a crescendo, that will be a long-term worry. But let me be clear, that's not something that's going to happen next week.
David, what did you do today? Did you find opportunities to get into?
Well, you know what? Actually, I stayed away. I sold a lot of stuff today. In my opinion, I think that we're looking at a lot more downside risk here. I mean, this was a surprise. It shocked the market. There was a lot of institutional volume. People weren't really positioned well for this. So I look at like what we've seen as a backdrop overall on the institutional side of the market. The hedge funds have really been underinvested on the long side, which is good news, because as the market pulls in, I'm hoping they're going to be there to buy a little bit of stock. But I think we've got to wait and see, because we need to get some clarity about this contagion. I know there's 2 important meetings next week. We'll get some clarity there. Hopefully, that'll at least calm the markets and you could step in and buy stocks. But when I look at names that I want to buy, there's not a lot that's really compelling here for the long term. I think I trade stocks here. I don't step in and invest for the long term. I'm looking at opportunities.
I might just add on to that by saying that the one thing we also need clarity on is the state of the U.S. economy. We're getting a lot of mixed signals there. You know, lost in the headlines today was a durable goods orders, which really disappointed. Now, that's a very volatile series, but you've had new home sales yesterday that wasn't exactly robust. On the other hand, you've had some regional Fed surveys here in the U.S. that have done better than expected, and initial jobless claims are really quite low. Unfortunately, we're not going to get much clarity until 2 weeks from now when we'll get the jobs report. That's what I'm really waiting for, to get some indication of how healthy is the U.S. economy. That's the one thing that could pull us through this.
Wilfred?
Jim, I wanted to ask about your view on the pound, because, yes, it fell significantly for a major currency pair, about 8%, but it's actually not that far below the lows of this year that we saw in February. So is it a little bit of a surprise that we didn't see a bigger fall in the British pound, given that it is the eye of the storm of this whole issue?
Well, Wilfred, I think it's a very good point, and I think you can actually say that about much of the markets this week. You know, yes, we did have an awfully big down day today in the stock markets, and we saw Treasury yields go down. But you know what? They're really just where they were a week ago. So, you know, for all the tumult today, we're not seeing a lot of long-term pain. I mean, the S&P 500 is still positive, for instance, on the year, not by much, but still positive. After today, you would have expected that people are really licking their wounds, but those wounds aren't as deep as people think.